Dubai has hundreds of active developers, but only a small group consistently delivers high-quality projects on time and with strong post-handover performance. Buying from a top-tier developer means you benefit from brand trust, predictable quality, strong after-sales management, and a global marketing reach. Buyers and tenants recognize the name and are often willing to pay more for it. Projects are delivered as promised, communities are maintained to a high standard, and the resale market is wider because these developers have an international audience. Smaller first-time developers cannot always offer the same level of trust. Even if the brochure looks impressive, the market does not view them with the same confidence. That lower confidence often translates directly into lower resale prices. The risk increases significantly when you combine a first-time developer with a brand new long-term development area. In locations that are expected to take more than 10 years to fully mature, such as Dubai South or Palm Jebel, expecting strong capital appreciation within 2 to 3 years is unrealistic. Even if your building is completed in the time, the wider area may lack essential infrastructures such as schools, shopping centers, public transport, and landscaping. Without these, resale demand is limited and rental yields can fall below expectations. There are cases where buying from lesser-known developers can still be a good move, but the conditions must be right. The location needs to be partially developed with existing infrastructure and amenities. The specific plot should have an advantage such as prime view, corridor positioning, or direct access to the beach or park. The price per square foot must be competitive enough to offset the brand risk. And finally, construction progress and financial stability need to be clear and verifiable. A good example would be new developer launching in an area like Meydan Horizon. It is close to established communities, connected by major roads, and set to have a metro link. The risk is still higher than buying from a developer like Emar or Nakheel, but the upside potential is greater because the surrounding market is already active. Established developers such as Emar, Nakheel, Miras, and Omniad provide a level of protection for investors. Their projects are widely recognized, easier to resell, and consistently delivered to a high standard. They also have the marketing reach to attract buyers from around the world, which adds another layer of liquidity to your property. Even when these developers launch projects in more speculative areas, their presence can speed up the development process. The market trusts them, which creates demand from day one. Not all emerging areas develop at the same pace. I break them into long-term, medium-term, and short-term development zones. Long-term zones take over 10 years to mature. Examples include Dubai South and Palm Jebel. These are huge master plans with limited current infrastructure. They are best suited for investors with a very long holding period, as capital appreciation in the short to medium term is limited. Medium-term zones reach about 80% completion in 2 to 5 years. Examples include Dubai Islands and Meydan Horizon. These areas already have some infrastructure or are closely connected to established communities. They offer a better balance between risk and reward, with the potential for good appreciation in the near future. Partially developed zones are already at least half complete. A good example is Dubai Creek Harbour, the Creek Island, and Creek Beach are areas almost fully handed over, and development is now shifting to the mainland. These zones carry lower risk and can offer both moderate appreciation and immediate rental demand. Fully developed zones include Palm Jumeirah and Dubai Marina. These are mature communities with global recognition. Appreciation here tends to follow the market cycle. Exceptional projects can outperform, but generally, these areas are chosen for stability, lifestyle, and yield rather than aggressive capital growth. The safest approach is to match the developer's reputation to the type of area you're buying in. If you're investing in a long-term emerging zone, stick to the top-tier developers with the financial strength to see a project through, no matter what. This reduces the risk of delays or quality issues. For medium-term zones, you can consider reputable mid-tier developers if the project's fundamentals, location, pricing, and design are strong. In short-term or fully developed zones, you can afford to be more flexible. Even a smaller developer can succeed here because the surrounding market is mature and the demand is already in place. Thank you for watching.